Alrighty, guys, what's going on? It's Eric here with Travel and Trading, here for you with another video. We're going to talk about candlesticks in this video, and I hope you guys are going to get a lot of information from this. There's a lot of stuff on the internet about it. I want to kind of just put it all in one for you quickly, straight to the point, so that it's much easier for you to understand, and you have to be, searching around for all this other stuff. Okay. Um, of course, it took me a while to put this together, so if you could do me a favor, like, comment, subscribe if you haven't already. Um, and just show your boy some love. It is February 17th, 2022. It is my birthday, so I'm taking my time out of my birthday to come here and teach you guys about candlesticks. So hopefully you appreciate that as well too. All right. So let's go ahead and get into it. Introduction to candlesticks. Pretty simple. So I like to do make this straight to the point. Here's what my goals are for you. The goal today is for you to be able to find out what candlesticks are, find out what type of candlesticks there are, be able to read and interpret them, and also be able to figure out what strategies that are built around candlesticks that a lot of traders may use on a day-to-day basis. Again, this video is very long. Well, the video here on the channel is going to be very long, but this is also tying into a longer video after the fact for course members that's a little bit more detailed than what we're going over here. So this is just kind of to get your foot in the door, test the waters, to get an idea of candlesticks. Again, course members will go much more deeper dive into this after this, beginning portion is over. All right. So pay attention, folks. Get out a pen and piece of paper if you need to practice this stuff. This is what I'm here for. We're going to learn a lot today if you don't know already. All right. And if you do know already, you'll get a little bit of a refresher. Um, so let's go ahead and get started with candlesticks. So what is a candlestick? Basically, guys, a candlestick is just an indicator that's a visual representation of price movement for security at any particular price point at any given time. It's also a form of technical analysis. If you guys seen any of the other videos I did about technical analysis, this is part of that analyzation of technical analysis when it comes to your security. And I say security again because it could be stocks, it could be forex and derivatives, whatever you might be trading. It's going to apply the same way. Okay. So to kind of give you a little bit of background about candlesticks, as we know, there's plenty of different charts that are out there that are used. I personally use candlesticks. I know plenty of other traders who do as well. Some don't, but it varies from person to person what you might like. But a little bit of background about candlesticks and where they come from. The candlestick charts, they're thought to be developed back in the 18th century by a Japanese rice trader named Mushina Homa. I could be saying that wrong, but hopefully that is correct. But they were then, introduced to the Western world in like 1991 or something like that, um, by Steve Nissen, I think his name was. I was like, I don't know, probably like 3 or 4 years old when that happened. But anyways, um, yeah. So pretty much that's just a little bit of background about candlestick origins and where they come from. And you got to be wondering, why is this important? Why do I need to learn about candlesticks? Um, I just want you to kind of know that there's a history and a background to it because it's not just some made up technical analysis that someone just came up out the wind. This was actually used, a long time ago as well. So yeah, there you have it. And then you want to know, of course, how to read, candlesticks. And it's pretty simple. Just like you recognize chart patterns, you need to recognize candlestick patterns as well too, and how they form. Okay, so here's pretty much how to read them. And what, essentially you're going to be looking at is a price from, open to close and highs and lows during a, a time formation, whichever, time frame is relevant to you. Okay. So yeah, so pretty much what you're going to do is focus on the open and the close and the highs and the lows. All right. So it's pretty simple here. Sorry, this picture's kind of blurry, but they're both kind of the same way. So typically your candlesticks, guys, are going to be either red and green, black and white. They represent, a bullish candle or a bearish candle. And they don't have to be that way, of course. Depending on the platform that you use, a chart, you could change it for whatever color you want. On average, traders are using red or green or black and white. Okay. Um, and we'll discuss psychology tricks around that as well too in another video. But anyways, so this is pretty much how you read the candlesticks. When you see a candlestick that opens up at this price, then it goes down here. That's the close. All right. So you had the open, and this is the body of the candle, and this is the close. This is the body of the candle. Then you have what's called the wicks, which is this point right here and this little line, and this point right here and this little line. Those are the wicks, okay? This is a high wick, this is a low wick. And this is how you basically want to read these. So this is the open where the price opened up at. The price at that point in time, whether it's 1 minute, 3 minutes, 5 minutes, 10 minutes, whatever, an hour, the price went all the way down to here and all the way up to here, and then it closed right here. Okay, so you see it opened up high, then it closed low, even though the price fluctuated in between them. Okay, and of course, this is the upper shadow of the wick, and it's the lower shadow of the wick if I haven't mentioned that already. All right, same thing for a bullish candle. It opens up here at the bottom, and then it might, go low as far as here, and then up as far as there, but eventually it closed up here. Okay, so open, low, high, close. You can do the same thing, open, low, high, close, if you want to do it in that order. But it's pretty simple, very easy to understand, so we won't spend too much time on that. So hopefully you got that point, across. So you got to understand, essentially what it's telling you. Essentially, what you want to know is that candlesticks will be telling you at least three different things that you'll be reading, throughout the candlesticks. Of course, you're going to be looking at the body, you're going to be looking at the wick, and you're going to be looking at the body relative to the wick. Okay. And reading these three things, guys, will help you determine a lot about the price of a security and the market sentiment toward it at any given time. And you want to know that because eventually what that can, do is predict the outcome going forward of what the market might feel about the actual security. All right. So again, different candlesticks will tell you different things about the price. And you definitely always want to compare the body of the candle relative to the wick as well too. Okay. And that'll give you different patterns, and we'll talk about that a little bit more in a second. But essentially, to kind of read it, like I kind of showed you guys in the video or in the last slide here. Um, you know, first here, you're gonna look at it open, and then second, you're gonna look at the wick, third, other wick, and then the close. That's a bearish candle. If it forms like this, where it opens up here, then goes all the way up there, goes all the way down there, and then closes up here, that's a bullish candle. Okay, so pretty easy to kind of distinguish the two. If you ever need to go back and reference them, you can right there. All right, so that's no problem. All right, so you got to wonder, okay, well, what is the candles telling you? The body of the candle is going to be telling you something, and so is the wick of the candle going to be telling you something. And here's basically how to read that. I'm going to give you a bullish example to kind of let it, sit into your framework mindset so you can understand it when you look at it in real time that we're going to do here in a second. All right. So here's an example of a bullish candlestick. Obviously, as a bull trader, I'm going to pick a bullish candlestick, but it'll be vice versa if you want to look at a bearish candlestick as well too. Okay. So pretty much here we had the price opening up at $90. It dropped all the way down to $86 and went as high as $112, and then it finished at $100. Okay. So essentially that was a $10 price move, but within that $10 price move, it went all the way down to 86 and all the way up to 112. Pretty easy to recognize. And look at it compared to the last example that I showed you where first you're reading number one, where it opens, looking at number two, how high it goes, number three, how low it goes, and then four, when it's finishing at. Bullish candle. Pretty easy, right? So remember how I was saying you want to compare the body of the wick of the candle and, have it relative to the size, comparing all that stuff. When you do that, candles will form certain candle types, and then those candle types will form certain patterns, which will then help you identify the potential movement of the price action going forward. And these are just a few of the candlestick types we're going to cover here, and then a few of the patterns we'll cover. Obviously, there's way more than this, and again, I'm for beginning purposes, I'm not going to go too much in detail with it. Later on throughout this course, for those of you that are in the course, we're going to go into detail all of them pretty much. Okay. Um, so here's some of the candlestick types we're going to cover: the hammer, the shooting star, the spinning top, and the dojis. Then pattern-wise, we're going to just talk about the bullish engulfing and the bearish engulfing as well. We're going to talk about the morning star, the evening star. We're going to talk about the tweezer bottom, and we're going to talk about the tweezer top. These are some of the most common patterns and common candlestick types that traders recognize and see. And of course, what that overall does in the picture of things is play to the psychological aspect of buyers and sellers and how they are going to treat a security. That's why you need to know this. Okay. Um, Pretty easy. So let's first talk about the hammer. Um, so pretty much it's pretty easy here. The hammer is basically a single candlestick pattern that's formed at the end of a downtrend and is a signal for like a bullish reversal. Okay, I like to see this candlestick a lot. The real body of the candle is kind of small, and it's located at the top of the wick. Okay, with the lower shadow below it, as you can see here. And, it should be more than twice the relative, relative to the body. The candlestick in the chart pattern is, is very little or, basically none. The psychology behind this is that the prices, opened up and basically went all the way down, and selling pressure pretty much just, got exhausted, and buyers came in and stepped up and pushed the price higher. And then, suddenly that pushes it into a bullish, a bullish trend, or a bullish, direction. So it came down, buyers came in and pushed it on up, which is why those arrows distinguishes that there. Okay. So pretty good, pretty good. Now there's also the inverted hammer. With an inverted hammer, it's formed, pretty much kind of like the opposite. The end, it's shown typically at the end of a downtrend, actually, and it gives a bullish sign of reversal as well too. So as a trend is forming down, you'll see, the the inverted hammer candlestick pattern come in, and then that's, typically a signal that it's about to change. The real body is located at the end, and the long upper shadow is, right above it. And the inverse hammer is kind of like a pattern as well too. So, but it's typically formed, when the opening prices are, near each other, and the shadow of it is twice the size relative to the body. So you can see this, thing is probably 2 times as much as, the actual body of the candle. Pretty simple. Then there's the hanging man. This is basically a single candlestick pattern that's formed, at the end of an uptrend, and it signals a bearish reversal. So if the stock has been climbing and climbing and climbing, and you see a hanging man candlestick pattern, that's kind of a sign there that, the bearishness is coming and the stock is about to reverse. And pretty much here, the body of the candle is small, it's located at the top, with the upper shadow, it's more than twice the relative body, and pretty much, you're going to start to see it turn down. Again, the psychology behind that is basically that the price has opened up here, and pretty much pushed down. Sellers were selling it off, selling off. Buyers came in, but they got exhausted, and it's starting to trend down. Suddenly, the buyers were basically unsuccessful with trying to push this price as high as it can go. And that's pretty much the psychology behind the hanging man. All right. And then there's the shooting stars, or sometimes called, the inverted hammer. You'll find a lot around the internet that some of these, it could get kind of confusing. They're pretty much calling, one candlestick one thing and it actually being another. They're kind of the same thing basically. And you'll begin to recognize them as you're reading charts more. But the shooting star is formed at the end of a trend, and it gives, a bearish reversal sign. Excuse me. The candlestick in the chart, the candlestick chart, the real body is located at the end of the upper shadow, and the inverse, of like the hanging man basically. So basically what you see here, it could be either green or red, either way it's a shooting star, however you want to look at it. But basically, there's little to no upper shadow right there, and you have, a long upper shadow above it. Okay, and basically that's just signaling, that it's going to reverse. Pretty simple there. Now you have the spinning top candlestick pattern. Okay, the spinning top candlestick pattern is basically a doji candle, indicating indecision in the market. The only difference between like a spinning top doji, and a regular doji is the formation of the body. Spinning is larger compared to the doji. That's really it. So basically, this is, a little bit larger, and you'll see the difference between the two as we go over, the candlesticks. Okay. So just kind of notice that this body here is bigger. The dojis, they're a little bit smaller. All right. Then there's basically the Marubuzu. I think that's how you pronounce it. Could be wrong, but that's pretty much, the best way I know to pronounce it. But anyways, there's black or red, either one you want to do, patterns for the Marubuzu, and there's also the green or white, whichever you want to choose. Again, color doesn't matter. Just know that one's bullish or one's bearish, and one's bearish and one's bullish. The black or the red, basically, candlestick is formed when a uptrend has indicated a a bearish reversal. The candlestick chart has a long bearish body with no upper wicks or no shadow, no shadows. Excuse me. And it's exerting a lot of selling pressure and making the market turn bearish or the security turn bearish. The formation of the candle is kind of like a caution um, that people are close to the buying position or closing their buying positions at that point. So you'll see no wicks there, but you see that everyone's pretty much dumping it there. All right, and kind of the opposite with the bullish or the white, candlestick from Marabuzo. It just kind of indicates a lot of buying pressures coming in. This usually happens when a downtrend has happened, and now all these buyers are stepping in. It's going to indicate a bullish reversal. There's no wicks, nothing like that. Just basically a lot of buying pressure coming in, pushing the security up to a higher price. I like to see those as well too as a bull trader. All right. And then lastly here we have the doji candles. This is what I was talking about earlier. Um, so the doji candles, it's an indecision candle that's formed typically when the prices that are opening and closing are almost equal or identical. As I was saying last time, pay attention to the body. This one is relatively smaller. The wicks really don't matter, but the fact that the body is kind of small is really what you want to pay attention to. The opening and closing prices are almost the same. So this is an indecision signal where bears and bulls are fighting, to get control, and no one has like got full control yet. Okay, so when the markets open and close, at the same price point, the candlestick typically resembles like a cross or a plus sign. That's usually what the dojis will look like. And traders look out for a short to non-existent body with the wicks of verifying length. So that's kind of a good thing to kind of analyze there. Basically, like I said, just shows a struggle, and although it's neutral, it can be found typically within reversal patterns or like the bullish morning star or the bearish evening star, and we'll cover those patterns here in a second. But ideally, that's what you want to look for. And like I said again, I'm going to show you guys a bunch of examples of these here in a second. So let's take a quick break here, review what we kind of learned. All right. So basically, what we wanted to cover here so far is what a candlestick is and the different type of candlestick patterns there are. I'm sorry, not patterns. Different types of candlesticks there are. All right. So we went over, big white candles, big black candles, Marabuzu candles. We went over the dojis. Um, we didn't really go into detail of the doji dragonfly and the doji gravestone, but basically that's where the opening and price close are still thin, but they're either at the top or at the bottom, and then the regular doji is just in the middle. So just kind of keep that in mind. Didn't really need to go into detail. That's a quick explanation of it. We went over the hanging mans, we went over the hammers, we went over the inverted hammers. We talked about the spinning tops. We didn't really talk too much about the shaving head or the shaving bottom. Um, Pretty self-explanatory there. Those are ideally some of the ones you'll see on average. And again, like I said, we went over the Marabuzu. So not really that hard to touch on all those. Just kind of get used to looking at those, candlesticks and identify them at certain periods of time to help you kind of indicate, things that might take place in the market or whatever security is you're trading. Okay. Um, you know, Usually, again, combining these together is where they begin to form a pattern and, start to do what we like to call more technical analysis to be able to predict what's coming up with the change of the security price. All right. So that was a lot to kind of digest if you're new. Take a quick break, let it soak in. When we're done with this, we're going to jump into the candle patterns. All right. All right, guys, we are back again here. Perfect timing because I finally got out of the ISPO trade today. Just made about 28 grand. You know what? I'll post the results in the video here for you guys. But anyways, yeah. So great birthday. Let's keep going with this candlestick um, training tutorial quick here for you guys. We'll do a little live review of ISPO while we're doing it here. But anyways, hope you guys got a good little break. So what we're going to get into here, now that we already understand the different types of candlesticks that are able to form, we're going to take a look at different patterns that come from these candlesticks. And again, this is important because These patterns can help you predict the outcome of, you know, price action from a security. All right. So pretty much, let's take a look here at the candlestick cheat sheet. You'll find this online pretty easily. But yeah, so combining candlesticks to form patterns is a really good way of technical analysis that people use to be able to gauge their, risk to reward and levels of support and resistance, and just overall part of their trading strategy. I use it all the time. So you can see that there's different types of patterns as well too. There's bullish candlestick patterns, there's neutral or basic candlestick patterns, and there's bearish candlestick patterns. Um, for time purposes, we're not going to go into every single different pattern that there is for you guys that are watching the tutorial on YouTube and stuff like that. For those of you in the course, we'll go over a lot more, but we're just going to touch on a few here just for time's sakes. Um, so you guys can kind of get a little bit of understanding of, what it is and how to spot them. Oh man, ISPO was up to $60. Okay, anyway, sorry, I keep glancing at the trades. But combining candlesticks, guys, you want to remember these few things here. You want to keep in mind, that lower time frames will make up higher time frames. So basically, for example, like in this picture here, let's say this is the 1 minute time frame for these. Those might equate to a 5 minute candlestick on, a 5 minute chart. So kind of keep that in mind. Um, I'm sorry, let me take a look at this trade here real quick. Man, it's at 63. But yeah, so you want to always want to ask yourself this when you are looking at candlesticks. Um, where does the price close relative to its range? So basically, when you're looking at the open and close, you want to look at where the price is, closing relative to the range. What's the size of the pattern relative to the earlier ones as well too? So you always want to be looking left and looking at the price action that was happening before the current candlestick that you're looking at. So keep that in mind. Um, Man, you guys are banking today in the chat room. Sorry. So yeah, so that's pretty much what you want to consider when you're looking at candlesticks. And forget the noise. There's construction going on outside. So hopefully you guys don't hear too much of that. But let's take a look at some patterns here. So first, we're going to start off with one of the more popular ones, which is the bullish engulfing and bearish engulfing. And those are pretty simple to kind of spot. Um, Basically, it's a multiple candlesticks. Usually, it's two. Um, that form after either a downtrend has happened and it's signaling an uptrend for a bullish reversal, or it could be one where there's a bullish uptrend and then it's signaling a downtrend. So it's formed because the second candle is typically engulfing the first candle. As you can see here, like say these last few candles before this was downtrending, 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 downtrending. Now this green candle comes in and it pretty much completely takes over the entire body of the previous candle. Okay, that's considered a bullish engulfing, and this is signaling that hey, buyers have stepped in, and this might change the reversal. This might cause a reversal in the price action of the security that you're looking at. And quite the opposite with the bearish engulfing. You've had a consistent uptrend, and now it could be signaling that it's time, for the trend to reverse and pull back some. Okay. Then you have the stars. There's the evening star and there's the morning star. We'll start with the evening star first. The evening star candlestick pattern is usually formed after um, for multiple candlesticks. Okay, usually it's three, and this is typically formed after there's been an uptrend or a downtrend for morning star, uptrend for evening star, and a downtrend for the morning star. But pretty simple there. So the evening star indicates a bearish reversal after three candlesticks have formed. What you'll typically get is like the third candle being a bearish engulfing candle. The second candle was like a doji candle, and of course, the first candle is just part of the normal uptrend that's happening. Okay, so the first candle just kind of shows the continuation that's happening with the uptrend. Second candle can be will typically be a doji or something similar, or like an indecision candle. Doesn't necessarily need to be that particular kind, but some type of indecision candle where the market's trying to decide to keep going or not. And then there's a bearish move to where it's going to start to signal that the trend is reversing. As a matter of fact, let's take a look at this here real quick while we're doing this real time. Let me pull this up for you guys. This is perfect. Look at this here in ISTO. We're all banking on this all day. Like I said, I just made about 28K from it. I'm not jumping back in this trade for the rest of the day. I'm gonna try not to anyways. But this right here is a great indication. And this is actually gonna fit more of the tweezer top. And we'll cover that here in a second. But we'll come back to this. But anyways, let me move that out of the way. Sorry. Evening star, that's where we're at. So that's pretty much what an evening star looks like. It's been an uptrend, and it typically a doji there, and then a long engulfing candle. Pretty easy to spot. Boom, boom, boom. That kind of breaks it down for you. Then there's a morning star, which is kind of the opposite. There's been a consistent downtrend, and you have a doji candle right here, and then you're gonna have a big engulfing bullish candle, which is gonna signal an uptrend. Pretty simple. All right. I'm trying to make this section a little bit quicker and easier, guys, because the more you start to see this stuff, the easier it'll be to recognize. Now you have a tweezer top and a tweezer bottom. So a tweezer top has happened typically when there's been an uptrend, an uptrend in the price of a security, and it's usually just two candlesticks. But both of them will have the same type of high, but the second candle will be typically bigger than the first candle, even though they have the same high. This one will be bigger, and it's going to start to indicate a reversal. Okay, and again, that's exactly what we see here with ISPO right now. So if I was a trader, I would begin to trade this to the downside. If I was in this trade, I would look for some shorts to short this at this point. And again, you can, set your tolerance however you want, but you see here how they have the same type of top. That's a tweezer top. Pretty easy to spot. You should know to begin to short this thing. Easy profit. And we'll come back to it and look at it and see if I'm correct or not. Because it could continue, but I doubt it will. This thing is moving today, but uh, let's go to the next one. Tweezer bottom. Same lows. The candlesticks will show you that. Tweezer bottom is basically a bullish reversal candlestick pattern, and it's formed when a downtrend has happened. You can tell here the stock's been going down, 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 and then all of a sudden you got a bearish candle and a bullish candle together, but the bullish candle and the bearish candle are at the same price with the open and close, which is going to start to indicate, hey, this thing is going to be changing. All right. So that's something that's good to know there. All right. So quick little review here. I knew this section was going to be quick because we're just going to touch on, a few different patterns. And these are the ones we touched on. Okay. Like I said in the course, you guys, we're going to go over a lot more, but this is the ones you want to focus on. That's kind of like the most common that you see. The bullish engulfing, the morning star, and the bearish engulfing as well too. The evening star, tweezer tops and tweezer bottoms. Okay. So take a quick second, look at this section, review it. I'm gonna pause it for a second. I'm gonna take back a look at these trades here and jump in the chat room, and then we're gonna get back at it and wrap this little bad boy up. So hopefully you guys have learned a lot so far. You learned what candlesticks look like. You know what patterns to recognize. Now we're gonna kind of put this all together and get it going. All right. All right, guys, we're back here again. Let's get ready to wrap this bad boy up. This should be quick and easy. Also, because I want to get back into this trade. Got back into ISPO again. Up a couple grand. I need to go ahead and get ready. But anyways, um, let's get ready to wrap this up. So we kind of pretty much went over the different types of candlesticks that there are. We went over different patterns that there are. So now we're just going to kind of put this all in perspective and just kind of give you a better sense of it and kind of give you some little thoughts, tips, and tricks by the time we're done. Okay. So let's continue on. All right, so we had mentioned before about higher time frames. The higher the time frame, the better because it gives you more confirmation. But you want to understand how the higher time frames come about. And basically, again, you know, it's adding all the smaller time frames together to equal that big time frame. So this is kind of, an example again, like I showed you earlier. You take this green candle plus this red candle, and it'll equal, you know, this candle here. So typically it could be, two or more candles. Once you kind of blend them in, they'll equal the third candle. As you can see here, this candle here plus this candle here would equal, a bearish hammer. This one here was an inverted hammer. So it's pretty kind of simple, to kind of understand that, and it helps you kind of gauge, confirmation of whether, stocks might be trending up, trending down, or, if it's just in a retracement period and all that good stuff. So this is just kind of, good insight to know um, how, higher time frames are formed. So you kind of see that confirmation. And you'll see when I post actually the results of the ISPO trade that I'll show you guys. I have the one time frame, the 5 minute time frame in my, in my charts. And I'm trading in 1 minute time frame, but I'm also using the 5 minute time frame as confirmation of, I need to get in a trade or get out of trade, vice versa. Okay. So the higher the time frame, the better, because again, you get better confirmation. All right. So what do you look for with the candlesticks? Why are you using them? What's the point of having them? A lot of people always ask this question. So typically you're looking for three things. You're looking for a trend, whether it's continuing or not. You're going to look for retracements. Okay. The candlesticks will show you that. And then you also look for like a break of structure, whether or not the trend is going to continue or whether it's, done. Like in this example here, sorry, it's kind of blurry, but this kind of here is showing you an overall upside, bearish trend. These areas are showing you just areas of retracement, and this where it's showing you it's not a retracement, it's a, a change in the actual trend. So as you get more experience with reading this, you'll, get a little, bit more familiar with how to understand and, you know, differentiate retracements and trend changes as opposed to just kind of guessing. Okay. Um, it takes a little bit of practice, but once you kind of get it, you start to understand it a little bit better. Okay. And there's certain, patterns that form that you'll, be able to tell. And we'll go over all that stuff there later on. So another thing that you're looking for with candlesticks, of course, is entries and exit points. A lot of traders are using these. Oh man, this thing is at $80 now. Okay, anyways, a lot of traders are using this as areas to enter or exit trades, and you can do that as well too. The best way to typically do it is pick one type of you know trade that you like and kind of go from there. Sorry guys, hold on. See, I'm about 10 grand right now while I'm trying to do this video recording. Um, with freaking ISPO. So that's why I keep getting a little bit distracted. Got my hand on the high key. Oh, 10 grand. All right, so let me close this out real quick here. But anyways, so yeah, so that's kind of what you're looking for there. Entries and exit points. And the different patterns will show you entries and exit points that, you might want to take. So let's kind of talk about just a few of them. Oops, sorry. And we'll go over a couple of them. And we'll do it live here. So hang on a second. Let me pull this up for us. All right. So this right here is just a little chart off of investing.com. This is actually showing you, um, a morning star candlestick pattern and an evening star candlestick pattern. As you can see here, this is showing you the time to enter. Remember, with the morning star, you're looking for that doji candle, and then you're looking for a buy signal, and you got that there. And then with the evening star, you're looking kind of for the same thing, but just the opposite. Okay. So it's pretty simple there. You kind of spot the downtrend versus the uptrend, et cetera, et cetera. So these are kind of key points you want to look for with entries and exits. And again, the more you see this, the easier it becomes. We got time here because apparently I'm stuck in this halt at 10,000. So let's see how this plays out. This is fun. Um, but yeah, so anyways, so that's what we're looking at there, guys. That's how you want to use candlesticks to help you identify areas of entries and exits. Okay. Um, let's pull this up here. So let's do this. I was going to use ISPO as a real-time example. We can kind of still do that even though it's in a halt here. Now, if you want to, kind of do this practice on your own, you can too. Again, it's February 17th. You can go back to this date and time depending on when you're watching this video and see if you can identify, any of that from here. Now, of course, candlesticks alone may not be, part of your trading strategy, but, is going to be a good part for you to kind of identify entry and exit points. So like I showed you guys example here, this was showing you tweezer tops, right? So you knew that bearish movement was coming, and that was a pretty decent bearish movement if you look at that. But then again, you had the signals that it was starting to come back up and break another high, and of course we're in it at 83.63 now. This thing was alerted at 20 bucks. But this is just a good example of different candlestick patterns you can see in forming whether or not you're, when you're in a trade and when you're out of a trade. Okay. Um, so many different types of candlesticks you can see here. You got engulfing candlesticks, and then there's patterns in here that I'll go over with you guys later on that are, in the course, but you can kind of see them. Um, so this is just kind of a good example for you guys to kind of understand different candlesticks. Okay. So let's get back to it. I mean, that's pretty much it for entries to candles. I hope you guys, learned a lot. Um, you know, there's so many different patterns and things you can formulate. Try not to overwhelm yourself with the different patterns that exist. What I usually tell a lot of traders that are new to is try to stick to maybe one or two patterns, one bullish one bearish one, and see if you can consistently recognize those throughout trades, whether you're doing swing trades, day trades, whatever. See if you can, identify those and, help form a strategy around trading that way. Okay. So that's the end of this tutorial. I hope you guys enjoyed it. For those of you that are, still watching this in the course, we're going to go over some more patterns. We're going to go over the best isolators, indicators to put with trading candlesticks and candlestick patterns. Because again, you want the odds in your favor. That's the best way to do it. And we'll go over some more of those patterns together and the indicators that are good to use with them. And we'll go over, what else you need along with trading candlesticks, because trading candlesticks alone sometimes isn't, a solid strategy. It's a good strategy, but it's not like, you know, the one thing that you need that all ends all that'll make you a good trader. Just learning candlesticks. There's more to learn. So we'll get into that. All right. For the rest of you guys, again, I hope you enjoyed this tutorial. Again, like it, subscribe it, whatever. I'm gonna put out more of these for you guys to help you out. But I got to get back into this ISPO trade, cash out my $10,000 that'll be on top of the $28,000 and call it a day. So I'll post it in a video later on when I'm done, and I'll catch you guys later. All right. All right, guys, so that about does it. Hopefully you enjoyed this video about candlesticks and candlestick charting. Hopefully you got to learn a little bit more and got to watch me trade a little bit real time. Luckily with ISPO, so now that you guys got a basic understanding, make sure that you're using, your candlesticks and candlestick patterns in conjunction with isolators and indicators as well too. If you like this video, please do me a favor, like, subscribe, comment below. If you have a favorite candlestick pattern, let me know what it is. I definitely would love to hear, you guys inputs and votes on what candlesticks you like best or which patterns you like the best. It's definitely always good to hear other traders' opinions on, what they trade, if they even use it. If you didn't find it useful, definitely comment below. Let me know. I'll make, different videos on something else that you guys might want to know. But hopefully, again, this helped you out. I'll post the recaps of the trades that I did with ISPO while I was trying to record this stuff for you guys. Great birthday gift for myself. So you guys now actually see firsthand why, other traders charge so much for them to take the time to show you how to trade, right? Because they're losing out on opportunities like this. But anyways, great day, great overall examples. If you guys, have any other thoughts or comments, definitely would appreciate them below. And until then, we'll make another video. You guys stay green.